Hey folks, it's me again, Erick Blackwelder, Exit First Choice Realty here in wild and wacky Woodbridge, Virginia, just down the road from magnificent Manassas. Probably you've been hearing a lot about the interest rates going down into the 4% range, and that's kind of unprecedented over the last few years, with interest rates hovering around 5, 6, even 7%. Well, what does this mean to you? So I made up some examples here so you can get an idea of just what it can mean to you if you were to refinance your mortgage and take advantage of the lower rates. For example, we have here a $300,000 house at 5%. The principal and interest payment on the note is $1,703 per month. Now, let's pretend we refinance that interest rate to 4.25%. That takes the principal and interest down to $1,427 and some change. You save $245 a month, or about almost $3,000 in the whole year. And if that loan is an FHA or VA loan, and it probably is, you can do something called a streamlined refinance, where all you do is sign about six or seven papers that your lender faxes to you or emails. You sign them, send them back, and guess what? In a couple of weeks, you get a piece of paper from your lender saying your new loan amount is this, and this is your payment. It's simple, it's fast, it is so easy. It's not like originating a loan where you got to give them blood samples and DNA samples and page 28 out of your 2006 tax return. Okay, very easy. Another example. Let's say you have a $525,000 note at 5.25%. Okay, so you have a principal and interest payment of $28.98. Now, let's say you refinance to 4.25. Well, your principal and interest drops to $25.82. Boy, I didn't write that 8 very well. $25.82. You save $316 a month, and that adds up to $3,792 per year. Imagine if you could be throwing that into your savings account or adding that to your IRA. You do that over 5 years, cheapers creepers. You would have added in, 5 times 4,000 roughly, close to another 20 grand once you figure that you're going to get some dividends in it, or that's equivalent to a car payment. So if you've got car payments, then the savings from the refinance would start to cover those car payments. Now, for you folks in the higher end, let's pretend for a moment. Okay, we got a $750,000. Whoa, wait a minute. Let's do it right here. $750,000 note at 5 7/8. Okay, because just the interest rate on jumbo loans is a bit higher. So your principal and interest on that note is $4,437 a month. Now, let's look at it the other way. It's still up in the jumbo range, so it's about a 1/4 point higher. So it's $750 at 4.5%. Principal and interest is $3,800. You save $637 a month, or $7,644 over the year. For those of you who like toys and want to get yourself a new boat, $637 a month could go a long way toward a new boat or a new car, or taking your existing car payments and just paying them off. So anyway, if you want to know more about that, I suggest you give a call here, and we can give you the names and phone numbers of a reliable lender in your area, depending on where you live, 9 out of 10 lenders haven't been around more than about 3 years. These are folks who've been around the business for 20 years. That's as long as I've been around. So you know that they know what they're doing. Anyway, Erick Blackwelder, Exit First Choice Realty, signing off. 703-590-2252, or look on the side and click the link for my email address. Bye now. Here.